to show you guys basically if you're a supply and demand trader, an SMC trader, ICT trader. I'm going to basically help you be able to identify more trading opportunities based on your strategy. I have my own strategy, but I just wanted to share some, some useful insight, tips on things that I think that would help your trading strategy. So yeah, let's just get right into it. So yeah, the first thing I'm going to do is I'm going to minimize this screen, and I'm going to start with we're going to do two pairs. One's going to be the silver, and then the other pair is going to be the dollar index, which is, I would actually recommend you guys use the dollar index if you're trading, because if you're trading with the US dollar currency, you're going to want to use the index, because the index is basically the US dollar currency alone's price action. So you literally can see the price action for only the US dollar. So this can literally boost your trading profitability on all these pairs on so many levels. So I would highly recommend, and you can just type it in. You just go on here and then you just type in DXY. So you just go here on the watch list and you just type in DXY, and then you'll probably see, yeah, add DXY to watch list. You'll see something on there. So let's get right into it. I'm just going to go ahead and first we're going to start off of the silver, because I want to just, I don't know if you guys trade futures or not, if you're a futures trader. But yeah, so for silver, the first thing I do when I'm entering a trade is, I'm not entering, but looking to enter a trade, is I identify my trend. So if we look here, the trend is obviously bullish. The trend is obviously bullish, and I'm just making the chart actually bigger so you guys can see. I can't go full screen for some reason on this because it doesn't allow me to do full recording on full screen for some reason, but I just want to show you guys how to do this. So the number key element you guys want to do, the first secret is to zoom all the way out when you're doing your analysis. So if you're doing market structure, it's really important to do volume analysis, because I'm not not volume analysis. If you're doing your trend, it's important to zoom all the way up, because it shows you the irrelevant highs and lows that maintain the trend. So if you are a trader that trades with a trend line, which I don't, you would take your trend line, right, and you would go like this, and you would draw it up against the price, right? But for me, I don't trade like that, but this goes for whether you're a trend line trader or not. I use actual market structure, so I mark out my actual highs, my actual lows, so usually I'll mark up at least 4. So right now we have 4 white lines on the screen you're looking at. So each white line represents a high and a low that maintains this trend. And so when you're actually identifying the trend and you found the trend, which in this case, the next step is to, of course, identify your current range. So we identified the trend. We said it was bullish. We have 4 pieces of market structure that confirms so. We have one high here. We have a low here. We have a previous low and a previous high. And not only that, this is the 4-hour time frame, which is good for long-term setups for a long-term structure. And also to avoid, like, it can look like you're going, let's say, bearish on a smaller time frame, like on the 5-minute or 15-minute, but if you go to the 4-hour, 3-hour, you'll see all these setups that you didn't know were there, and you'll see all this stuff. So yeah, I'm on the 1 hour zoomed all the way out, and like I said, zooming out lets you see what's irrelevant, and what's irrelevant are the white lines, the high, low, previous high, previous low. And so that's, like I said, done. And the next step is to identify our current range. So our current range is our current high and low live. So live, our current high is this. Our all-time high is, I call it my all-time high, all-time low, is 34,04129, right? So let's just look at it in the first number. So if you look up to the right, you'll see all these coordinates and all the numbers of price. So as the price gets higher, we go to 33, 34. I'll point the arrow to it. 33, 34, 35. And as price gets lower, we get to 34, 35, 33, and 32, and 31. So the lower part of the range, which is near this white line, which is my market structure for the low, the most recent low, that is around the price levels between 31 to 30. And as the price gets higher, it goes up to 34, 35, and which is near my most recent high. So if I'm buying, would you rather buy at a higher price or a lower price? Low prices, because that's what you're doing if you're trading supply and demand or smart money concepts. We identify structure based off volatility because the news moves the markets, and the banks and institutions are the ones that move the market in the forex market, and that creates new highs and new lows because the ones that move the market, like I said, have enough capital, which is enough volatility to move the market to create these highs and lows in the first place, right? So since I'm at to divide where you're at, you always want to, this is the key, know where you're at in your current market structure. So like I said, we're at a low. Why? Because price live is right here at the lower part of the range near our low, right? Okay, so now I'm going to actually divide this range in half, and we're going to do what's called, take the tool, the GAN box on TradingView, and we're just simply going to drag it from the bottom all the way to the top where we see this high right there. And as you can see, you'll see the 3 green lines minus that other green line, which I'm about to delete. And if you notice, there's 3 green lines. So the one in the middle stands for and represents the half, where the trading range is divided into 2 even halves. So right now we're at the bottom half. Price hasn't reached the top half, which is good. So if we're looking for setups, you want to look for setups in this shaded area that I'm about to draw in the bottom half. And the same thing can be applied if you're selling. If you're selling supply and demand ICTs, I don't care what you're trading, smart money, you want to sell high. So if we were selling in this case, you want to be selling at the top of the range. So to label these and help you guys understand this, we're going to take what's called, I'm going to take this tool. In the top of the range is your premium price. So that's where prices are expensive and high. So you can say top of the range is where high is your high prices slash premium, and the low part of the range, where if you're buying, is called the low prices slash discount. So discount areas stand for areas that are at a discount, because literally it's at a discount, because if you look to the right on the screen, like I said earlier, we look at where the coordinates are, a price, the current price is 31.31700, and that's low discount considering that our all-time high was at 34, right? And we're in a bullish trend. So we're getting in early, like smart money, like investors do. Investors always getting early. So we're buying silver at $31, and it's going to raise to $34. And yeah, so this is literally what I do. I'm a simple trader. And now to actually find a setup that you can trade right now, what you're simply going to do is you're going to just take, like I said, we established that we're buying, and we know we're currently at the low prices slash discount area that's shaded. So what we're going to do is we're going to identify some liquidity, and we need this liquidity because liquidity are areas where where traders have their stop losses. Specifically, traders like me and you at home that don't know what smart money is doing, that maybe trade with a different strategy like support and resistance, and which is the major the strategy you learn when you first join, when you first start forex. I don't trade support and resistance. I trade supply and demand, smart money concepts, and what I just drew right now is represent that green line you guys are looking at. That's 3. Here we go. That green line represents my area where traders in the market right now have their stop losses, and the reason is because most traders would see this, since we're on the 4-hour time frame, they would think this is a resistance level, and the reason is because it's there's multiple wicks tapping into it at a resistance right there, so they would be selling off here. But what I'm going to wait for is, you see that green line? Again, you see that green line? I'm going to wait for price to actually break out of this green line completely, not a little bit, completely. And then once it's going to do that, it's most likely going to be smart money or the banks and institutions, because they, like I said, when they enter the market, there's usually high volume. So if we turn on the volume chart, and you notice the blue stands for bullish and gray stands for bearish. So if you notice, the bullish volume is slowly increasing. So that means bullish momentum is slowly increasing. So if we see another blue giant candle break above that green line, we'll see actually another a spike in volume, and that will be your confirmation to get in, because this green line, like I said, represents our liquidity areas. So our buy side liquidity, So which would be our resistance, because this is an area precisely where traders have their retail. I mean, sorry, their stop loss, and smart money knows that. So what smart money is going to do is they're going to take all this money here that's floating in the market before going back up and going to that high price premium. And so yeah, guys, that's pretty much all I'm doing to get into silver. I'm going to wait for a price to break this liquidity. It's like a break and retest in other strategies. You ever heard of that? The break and retest? It's literally all it is. We're just breaking a liquidity area with a lot, and like what I meant by liquidity, areas where there are large amounts of orders, or just orders with retail traders, and areas where there are stop losses, basically stop loss areas. Because if you were selling this and you were a retail trader at the green line, you thought it was resistance, you probably would have took all your, imagine all these risk to reward thing boxes I have right now. All these risk to reward boxes are traders. So all these traders are trying to trade the market going down. So like that, they're maybe trying to trade it like this, blah blah blah. And yeah, so they're trading it and they're thinking it's going to continue to go down because everybody's like, oh yeah, it's going to go down. So what's about to happen is they're all going to be taken out and then they're all going to lose money. And then yeah, so that's pretty much how it works. So another key factor, you guys can rewind the video, but another key factor is news. So I trade with news because we need news to move the market with enough volume. Because the news, for me, it presents me opportunities by moving, like I said. And when the markets move, especially when the markets move on volatile, that creates an opportunity for me in the way I trade, because I trade volatility, because volatility has money in it, in volume. And so I trade supply and demand. Supply and demand works well with volatility. And I trade imbalance gaps. You can call them FEG gaps, which are a little bit different from imbalance gaps. Or I trade order blocks. So order blocks and imbalance gaps are my entries. So that's the type of setups that I take. I also trade Wyckoff too, but I trade those two setups that I said. And what I do is these setups have to have, for them to be confirmed, they have to have high volume. So my entry area that I'm entering, it has to have high volume. But yeah, guys, and another tip is when you're doing your charts, I know this is really simple, but this can literally make you a lot of money. I know this is simple, but in Forex, the key to making money with Forex and being consistently profitable is focusing on the charts, because your strategy is what makes you rich in Forex, because all the profits come from your strategy and you doing that consistently with discipline. And so in order to focus and have discipline, a good idea is to go full screen. I'm not on full screen right now because it won't let me do it on this record thing. But a good thing for you guys to do is just go ahead and do and press the full screen option and do full screen. Play some lo-fi while you're opening the charts. Listen to some music. Relax a little bit. Have a snack. And then what you're going to notice is you're relaxed and it's easy for you to find trades, and you're actually putting the effort in versus trying to rush the trades and hurry up with the setups. And when you do full screen, you can actually see the price action a lot better, and you can focus on the charts a lot better so you can become profitable. But yeah, guys, I hope you guys got some value out of this video. And I don't have a course or anything. I don't have a course. I have a free group. You guys are welcome to join my free group. I do have a one-on-one coaching if you're interested in my personal approach and my strategy, and you actually are serious and you want to learn what transformation that made me from going from literally 4 years of unprofitability to now, in the last 2 years, profitability. So yeah, guys, if you rather not just piece together all my YouTube videos and try to figure out all this stuff, and you rather just have a step-by-step mentor that can show you every week what to do and be on top of your ass on this, then I suggest you get my one-on-one coaching. It's not $400, it's not $300, it's not $200. It's a good price, guys. It's a good price. I know you can afford if you're serious. And if you guys don't want that at all, that's fine, and you would rather have a more solo approach, check out my ebook. I have an ebook down in the description. I have an ebook. None of my stuff costs a lot. I have an ebook, and inside my ebook, it tells you it's 49 pages of value that shows you how to trade like I trade. It shows you what the banks and institutions are and how they influence the market the way that we need to so we can make money. And yeah, guys, if you're interested in my ebook or my coaching, or just check out my free group. Don't buy anything. Just join the free group, connect with some traders, post your charts. And yeah, guys, I hope you guys got a value out of this video. I wanted to make this a quick, simple video because it's easy when things are simple. I don't want to make the video longer and talk about other stuff because I just want you to learn. The secret is to not overlearn. The secret is to just learn enough for today. Learn enough so you can remember it, because remembering it and learning it is more important than memorizing it. And that's what I've learned from years of just memorizing. So take what I said today in the video, watch it again if you need to, and actually write down the steps I gave you, the valuable steps I gave you to help you find more trades. And if it doesn't help you, comment. If it does, whatever. But yeah, guys, I hope this video helped you. I hope you guys succeed on your trading journey. And yeah, guys, peace.